So, hey everyone, I'm Nima, and we're back with another Z Investor podcast. And today I'm pleasured with the opportunity to talk to Kyla Scanlon. Sorry if
Yes.
I said that right wrong.
No, correct. Yeah.
Oh,
Yeah.
great. Just some background info. Kyla popped up in my YouTube recommended, and her videos are absolutely amazing for anyone learning about, or anyone starting to learning about macro investing or anything else going on in the market. She's worked as an associate capital. She's worked as an associate at Capital Group and has helped investment partners at the great folks at On Deck. Check her YouTube, Twitter, and newsletter out in the description below. Highly recommend it. Kyla, I'm super happy to have you on, and it's great talking to you.
Yeah. No, thanks so much for having me. Happy to be here.
No worries. Yeah. So that introduction probably didn't do enough justice. So could you explain to the listeners your journey into investing and eventually becoming an educator online, having your newsletter and, being prevalent on FinTweet and all that?
Yeah. Yeah. So I actually started trading options when I was in high school. So that's kind of how I forayed into the market. I'm from Kentucky originally. I went to school in Kentucky, studied finance, economics, and data analytics. I graduated in 2019 and moved out to Los Angeles for a job at Capital Group. There, I supported an equity portfolio manager, sat on a high yield credit desk, just really got a lot of exposure to the more corporate side of finance, which is really fascinating. And I ended up leaving that job at the beginning of this year to take a job at a tech company called On Deck. I built out the investment education fellowship there and left that job about two or 3 months ago to focus on content full time. I'm building a financial education startup. So just wanted to make that full-time entrepreneur leap. And that's kind of the path that's been I've been going down so far. Yeah.
Yeah, that's pretty interesting. Uh, how do you find the difference between working in like a corporate style environment at a big like tier company to moving to the entrepreneurial side of things and working with On Deck, who's known for helping out startups and founders and stuff, and eventually moving on to yourself making content? How did you find those two like to differ or that balance?
Yeah, I mean, so I had internships all throughout school. So I kind of knew a little bit. I had worked at a regional asset manager in Kentucky and I sold cars for one summer. So I had a little bit of experience like in the workforce. And so that helped with the transition into Capital Group. But there's a lot more structure at a traditional institution just because they've been around, like Capital Group's been around since the 1930s. So they're going to automatically have a lot more structure, a lot more, frameworks in place for how things get done versus On Deck, which was I don't even think they're a year old yet. They're
Yeah,
very young.
yeah.
Yeah.
Their
And so
first like venture fellows were like in March or something. So yeah.
mhm. Yeah, so they're also like a COVID company. So the flywheel really began to spin during COVID when everybody was at home and On Deck was able to really capitalize on that opportunity. And so the business model kind of shifted when I got there. And so that was really interesting. Just like there, I kind of built something from the ground up, which was the investment education fellowship or the investment investor fellowship, and sort of like building something. And I just got there and they were like, go build it. And at Cap Group, like there would have been so much like, here's like all the meetings that you need to have exactly about building something. But On Deck, they were just like, bye-bye, like go do it.
Yeah.
So that really, really helped prepare me, I think, for like what I'm doing now and like just the autonomy that's required to be, an entrepreneur. Yeah.
Yeah, that's great. So you also mentioned that you traded options in high school, and I'm pretty sure, I don't know how old you are, but in high school you didn't have like your YouTube videos to watch to learn about all this stuff or stuff online. So how did you go about teaching yourself about these concepts? Did you have any connections or anything, or did you read, or what was it that you kind of learned through to first break in?
Yeah. Yeah. So I just turned 24. So Tasty Trade was like the primary, and they were on YouTube. So there's like a couple of YouTube channels, but there was not the amount of content creators that there are now, because that was like almost 10 years ago now, which is crazy. And so there wasn't like the amount of content that there is now, and there also wasn't like the easiness of Robinhood. Like I was using TD Ameritrade, Thinkorswim, and there was a little bit more friction with that. So I just watched a lot of Tasty Trade stuff, which is a really great platform for learning about options trading. There's a couple of other YouTubers that I watched, but primarily Tasty Trade. And then the way that I taught myself was like, which I don't recommend, was like through trial and error. So I would do paper trading and get burned pretty bad on trades just to figure out like what the actual underlying dynamics were.
Got it. Yeah. That makes sense. Paper trading. So
Yeah, yeah,
yeah.
yeah.
It-
Versus
oh,
like, well, I mean, like when you're young, you just don't have a lot of capital to invest.
mhm.
And so that really prevents like the upside that you can have on certain trades or did. The markets were nowhere near like how they are now either, where you can like throw money into GME and, make 200x. Like that didn't really exist back then. So things are definitely a little bit different for you all. Yeah.
Yeah, I'd assume option trading may have the volatility levels weren't as high as they were now. So yeah.
Nowhere near it. Yeah, I mean, I remember it was like a big deal if you could. I think it was like 18. That's still pretty high for the VIX, but yeah, it was definitely very suppressed levels of volatility when I was trading. Yeah.
Yeah. So you mentioned that you create your own curriculums and stuff, and it's either very structured at a Capital Group or very freelanced at On Deck. So how do you usually go about creating curriculums, and what do you feel like are really important parts to incorporate into them?
When you say curriculums, what do you mean?
Uh,
Or did
sort
I
of,
say that word?
yeah,
Okay, so I can like dive into the two jobs that I had, and maybe that can like clarify
sure,
what
yeah,
it.
go ahead.
Okay, is that kind of like what you're asking?
Yeah, yeah, go ahead. Yeah.
Yeah, so like they were two different jobs. So at Cap Group, I was part of the TAP program there, which was an early career rotational program. And so the goal with that is that you just get exposure to all these different jobs within Capital Group. So when I first got there, I was in our fixed income office and I was on an operational team. So I helped to spin out Aladdin, which is black. So I helped to spin out a very big operational component of the trading arm, which is this product called Aladdin. And so it helped the traders execute their trades. And they're really, really big trades because it's a very, very big institution.
Mhm.
So that was like my first job at Cap Group. And then after that, I moved to the derivatives team where I did a lot of like derivatives within fixed income. And then after that, I moved to an ESG rotation, so environmental social governance, and did a lot of research around if the world imploded in 50 years, kind of like the investment horizon leading up till
Mhm.
that point,
Yeah.
which was really interesting. And then my final rotation was with an equity portfolio manager who specialized in real estate and a couple other sectors. But I did a lot of like real estate modeling for him, did a lot of presentations around real estate, got to sit in on a lot of different like company calls. Like I remember sitting in with the CEO of Doc Martens and like listening to them talk. So that was very, very cool.
Oh
And then,
wow.
and then at On Deck, it was like totally different because I was building out curriculum, like you said.
Mhm.
In there, I was like thinking about, you have all these investors, it's about 120 investors. How do you build an 8-week program that can kind of get people from 0 to 100 within their investing journey? So those are like the two jobs that I've had.
Yeah. So when you're developing that 8-week program at On Deck, what did you really consider to put into it, or what were some like big fundamentals you want to incorporate or really focus on there?
Yeah, I mean, so that was like a very big learning curve because one thing that I figured out very quickly is like you can know the markets, but it's another thing to teach the markets, right?
Mhm.
And that's with anything that you do. And so for that one, it was more so about like the investing journey is so personal. So you just have to really help people figure out how like their risk preferences and
Mhm.
how they want to allocate. So a lot of people, they can't sleep very well at night if they know that they're like 100% in Tesla stock. So you just have to really help people get to the point where they're comfortable with their investing process. Yeah.
Mhm. So it's not really a one shoe fits all kind of thing where you can, put someone through something and they come out perfectly, or they know what to do in markets.
No, no, it's not. And I think that's kind of the problem with financial education and why nothing has stuck so far is because it's such a personal process. Yeah. Yeah.
Yeah, because a lot of people now kind of think that they can go a direct route to, and this goes for really anything in life, go a direct route through something and come out like perfect on the other side when there's a lot of ups and downs. Like you can look at my YTD chart and there are a lot of ups and downs, but
Yeah.
yeah, there's a lot of ups and downs to learning anything or getting started. So yeah.
Yeah, no, totally. And you really have to like be paying very close attention because with the markets, there's so much noise. So
Mhm.
oftentimes you're like, oh, like maybe it's just something other than that, the personal preferences
Yeah.
of this person. But yeah, the volatility of the personal experience is definitely something to take into consideration.
Got it. So from becoming an educator to on deck to becoming an educator on YouTube, a
Mm.
lot of your content, and I love it so much, is very like I don't know, it caters to kids and or people in my generation. It's very you know, you throw in like a picture of like a horse or something, or a couple of memes, and it makes these like boring topics very interesting. So like other than like what I talk like horses and memes, like how do you usually go about making these boring topics? And even if you did this also on deck, how do you go about making these boring topics really interesting and intuitive to like people watching your videos and your target audience?
Yeah, I mean, I think so. Like my job now is way different than when I was doing it on deck, but I think like to make stuff interesting, like people have to realize that they're in the markets every single day. So like we're exposed to markets when we go to the grocery store, when you like pick up an apple, right? Like that apple had to get to you, that had to go through a supply chain. You have to take it to the cash register, and then that's a monetary transaction. So I think the main thing is just like sort of showing people that they interact with the markets every single day, but also interjecting humor into it. Because like honestly, some of this stuff is absolutely absurd, like what Elon was doing on Twitter this weekend, with the Twitter poll and then calling out the senator. Like there's
Mhm.
just so many ridiculous things that happen, and it's fun to laugh at that stuff. And traditionally finance takes itself very, very seriously. And so I think it's important just to like be like, some of the stuff that's happening is just absurd, and it's
Mhm.
okay to kind of, draw humor around that.
Do you feel like it's easier now to educate people about this stuff on YouTube because of like, how absurd this stuff is? You have like Squid Game coin going up 2000%, and you can talk about. Do you feel like it's a lot easier now to sort of get that point across?
I think so. Like, there's definitely a lot more to talk about. Like when the markets were flat during 2017 to 2018, like there just wasn't as much. But now you have crypto, you have the economy, which is just like with the Fed doing whatever they're
Mhm.
going to do. And I'm a huge fan of monetary policy. I find it fascinating.
Yeah.
And then you have the stock market itself. So there's almost like these three different entities that you can pick from, and almost guarantee like any one day, one of them is going to be doing. Like Powell spoke today, right? He
Yeah.
gave the chairman of the Federal Reserve spoke today. And also like Jeff Bezos tweeted out a picture at Leonardo DiCaprio. And so like there's just always something happening because of social media, because of how weird the markets are. So there's a lot to grab onto. And then you can turn all of that into like a learning experience.
Yeah, that makes sense.
Yeah.
What did Jeff Bezos? I don't. Was
Yeah.
it the video or did he tweet directly to him?
So it was the video. I think Barstool maybe tweeted it out, where it was like Jeff and Leonardo DiCaprio, actually at
Yeah.
LACMA, which is like literally a block away from me, which is kind of funny.
Oh wow.
So a museum, and I think there was a woman who was like, I think Jeff Bezos' girlfriend or something, like they were together, I think, and she was looking at Leonardo DiCaprio in a very
Oh
like
yeah.
adoring light.
Yeah, that
Yeah.
video. I thought you meant Jeff Bezos tweeted something about
Well, he
that.
did. He
He
did.
did.
So he tweeted a picture of him like flexing over a cliff, like the sign that's like warning you could fall off cliff. And he's like, Leo, I'll meet you here. And he's like flexing over this sign. So yeah, it was just like, like
So
what is going on?
there you go. That's your next YouTube video idea. There,
Yeah,
how Twitter affects the markets or
yeah,
whatever. So
yeah, it's
yeah,
huge.
I
Yeah.
mean, do you think it's a lot harder now to get into investing with all this noise and stuff, or do you think it's easier now because all this noise is making prices super volatile and you have stuff going up 10%, down 10% or whatever?
I think it's definitely easier to get in. I just worry that people's expectations are anchored to something that I don't think is super sustainable. Like the idea that something is going to go up 10% forever, it's just like maybe, but to go up 10% forever is going to require a certain amount of continuous inflows. And I do think that we're going to start to see, consumers are going to have to pull back at some point. Like there's not the same amount of easing that we used to have. So there's not going to be
Mhm.
the same amount of fiscal stimulus in terms of stimulus checks. And then also monetary easing is pulling back with the Fed, pulling back on tapering. So with tapering, they're just not making things as easy. It's a little bit harder to get loans. So I do think that the markets are going to have to calm down a little bit in terms of how much they move. I do think it's easier to get in, but I don't think the structure is easier to be in.
That makes sense.
Yeah.
So when you talk about people's goals not being sort of anchored in the proper market reality where inflation rates aren't at a record high thing, what do you think is the best way to define like people who are just starting out, Gen Z investing goals? What do you think? You touched on personal risk tolerance and all that. What do you feel like is the best way for them to define their goals on getting started and where they want to be?
Yeah. I mean, I think like, so this is just for the investing aspect of it. I think like the saving aspect is a little bit different. But save money, definitely don't spend all your money. And I think a cool thing for people who are just trying to get involved in the market is like invest in the products that you use. And this is really quite common advice, but I think it's really good. Not a lot of people do it. But like if you go to Starbucks every day, you should be invested in Starbucks stock. Like if you buy Nike shoes, you should probably invest in Nike.
Mm-hmm.
So I just think it's like, how can you sort of tie your life into the stock market and benefit from the upside of you participating in the economy?
Mm-hmm. Yeah, buy what you know. That was
Exactly.
by Peter Lynch. I'm not too sure, but
Yeah,
yeah.
it is.
So yeah, that makes enough sense. And once they define their goals, kind of, what do you think is the best way for like Gen Z or people starting out to actually, learn or get started? Yeah.
So yeah, I'm building a company that'll hopefully solve this. But I mean, I think right now it's just like find people that you like to listen to. So if it's people like me, where we're on YouTube just talking about different things and you like to listen to stuff, like definitely find different YouTubers to listen to. I think that and be careful about who you listen to. But
Mm-hmm.
if there's somebody out there who you're like, oh, they have really good insight on the markets, like that's really good. There's a lot of really good people on Twitter to follow, and most of them are pretty receptive to answering questions if you have any. So try and like reach out to maybe like different investors that or different people that you think have good insight on Twitter. And then I think like another thing is just like play the game. So download Robinhood or TD Ameritrade or whoever you trade with and put your money into the market, because that incentivizes you to pay a little bit more attention to everything that's going on.
Mm-hmm.
So those would be like my three things: is try to spend a little bit of time each day reading about it, because it's primarily osmosis. Like unfortunately, the way that the markets are structured right now, and part of the reason I make the content that I do is because it's like you can't go to a traditional finance textbook and learn this stuff. Like
Yeah.
it's too out there.
Yeah.
So you just kind of have to like stay on top of everything. And you don't have to, but it's helpful to keep tabs on what's going on to
Mm-hmm.
process it.
Yeah, that makes sense. And when you mentioned like keeping tabs on everything and how, you know, uh, one day you have Elon Musk proposing selling $25 billion worth of Tesla stock, and the markets are generally clear. How do you usually feel like people should go about filtering that noise in the markets when
Yeah.
they're trying to keep on top of things? Like, how can they distinguish between like, I don't know, some crypto going up 2,500% and like the Fed saying inflation is transitory? How should they distinguish between what's more important to pay attention to than what's not?
So, I mean, I think a lot of it is invest in what you know.
Mm-hmm.
So I think if you think that Tesla is going to be a great stock over the next 10 years, like Elon tweeting about what he tweets about shouldn't impact you over the 10-year
Yeah.
long run. Because 53% of this time, like stocks are going to trend upwards, right? And so
Mm-hmm.
you should be fine over that 10-year holding time frame, as
Yeah.
long as the markets don't implode. And I think with like the crypto stuff, that's a little bit harder. I think that like Masari and Delphi Digital, like just these very established crypto companies are very good to pay attention to. And if it's promising you like 1,000% APY, that's probably not something that's going to be sustainable. So just try and like pay attention to good people in the space. A lot of crypto research companies do a very, very good job at separating signal versus noise. And then with like broad stock stuff, um, uh, that's a little bit harder because we all tend to get wrapped up in that narrative. But I think with stocks, like most of the time, unless you're trading, people are going to hold them over a longer term. So you just have to be like, okay, this is going to be a momentary burst of noise amongst what's hopefully pretty high signal.
Mm-hmm. That makes sense. Yeah. So next question. This is a question coming from someone in our community. Do
Yeah.
you feel like there is a generational gap in investing education currently? Like there's a lot of content that is catering too much to boomers that I can't understand.
Yeah.
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 I mean,
Is that
I sent your YouTube channel in, and this is the question that came back. So there you go. Yeah.
Yeah, no, I mean, that's kind of like why I make the content that I do,
Yeah,
is because there's
definitely.
this, like 16 to 27 years old, like nobody's making content for them.
Yeah,
It's like Grant Stefan or like the other guys on YouTube,
yeah,
or TikTok really too. But yeah, I mean, like Fidelity, Vanguard, etc., all those investor education platforms that are tied into the products that they offer, it's all designed for boomers. It's like, okay, you have $100,000 saved. How should you allocate it? And most people don't have that, right? And I
yeah.
think there's also a desire to like talk about the stuff that's going on in the markets. Like it's interesting, right? Like it's kind of like the way I think about it is like people like to watch sports, people
Mhm,
like to watch markets, right? Like you have to
mhm.
have the same level of commentary almost. So I do think there is a really big generational gap, not only in how we think about investing, but how we talk about investing to this next generation. So a lot of not a lot, but I would say a few vocal baby boomers have kind of written off this generation of, and it's a little bit frustrating. So I do think that there is a little bit of a gap, and the game has changed a lot, and it's just hard to keep up with that, and play it alongside them, if that makes sense. Yeah.
Yeah, that's why I'm asking you a lot of questions, or why people are asking a lot of questions about how they can get started, and the
Yeah.
entire reason we have these videos and make content like this, because there really isn't like a bridge to gap that. And it's an important bridge to gap, because if
Mhm.
if you aren't learning about finance now, then when are you going to? When, until it's too late. So
Yeah.
definitely.
Yeah.
So next question. What do you think people's biggest misconception what do you think people's biggest misconception is when they start learning about anything related to economics or markets? So,
Uh, I think a lot of people think it's boring, right?
oh,
Like at first. And I don't think it's boring. And like I'm probably super biased and everyone's like, oh, she's so
mhm,
silly. But
yeah.
I mean, I think it's just as fascinating as sports or TV,
Mhm,
like different TV shows, because like you have so many, like it's everything around us. It's supply and demand. It's like price structures at the supermarket, like anywhere you go, anything you interact with, like that's a market structure, that's an economic entity. So I think like that's the biggest thing is people are like, oh, it doesn't impact me. But you're literally living within like you're in a society. Like it's kind of like that, right?
yeah.
So yeah, I think that's the biggest misconception is people think that they're like 1 degree separated from the economy when really they are the economy.
Yeah. I mean, I guess this is why you love macro and monetary so much,
Yeah.
because it's it's so relevant to you. Tying to macro, uh, what's your entire opinion on the hyperinflation and supply chain disaster stuff going on right now? Is there any like insight that you have into it that you like want to bring up or anything?
Yeah. So I talked about both hyperinflation and supply chains on my YouTube channel. And I have a series called Everything You Need to Know, which are like approximately 10-minute videos breaking down all the different things that you know in the markets. And if people have like requests for that, I do take them. So if somebody wants to DM me on Instagram or find me on Twitter, just let me know and I can help with that. But with the supply chain and hyperinflation narrative, like it's a little bit tough because with supply chains, like there's a couple different types of inflation, right? Like there's demand pull and then there's cost push. And so with demand pull inflation, that's going to be consumers demanding a lot of different products. With cost push, it's going to be producers getting pressured, right? So it's going to be
Mhm.
more expensive for them to produce an iPhone versus consumers going out and demanding different goods. People are like, oh, we have to raise the prices because so many people like want our goods and we're going to have to manage that.
Yeah.
So with the supply chain crisis, it's kind of like this perfect storm of consumers demanding a lot of goods because we're almost on the other side of the pandemic. And then also the supply chain is broken, right?
Yeah.
Because we have just not good policy around trucking, really bad policy around ports, and just all of this very like archaic model around a very, very sensitive supply chain. So everything is just in time inventory. Like if one thing breaks, the whole thing breaks. And
Mhm.
the reason that we're seeing this like narrative of hyperinflation is because we're in this like very, very pressurized environment where you do have demand pull, where you do have cost push because of what's going on with the supply chain. But there isn't hyperinflation because that'd be 50% increase in prices month
Mhm.
over month.
Yeah.
And at that point, you would have to, like this happened in Weimar, Germany, back in the 1930s, 1920s. And that was when the government was just printing money in order to finance war debts. And that's a
Yeah.
very, very different situation than we are in now. So we
Mhm.
still have a government that's responsive to with monetary policy. Like they're going to pull back on tapering, or they're going to pull back on easing. They're going to start tapering. So I think with hyperinflation, like that's just not a situation that we're in yet.
Yeah.
And I don't think supply chains are going to cause that unless they completely collapse, which I really hope doesn't happen. But yeah, I mean, I think that's like the biggest thing is like we are seeing inflationary pressure, but that will likely subside because demand will normalize, I'm assuming, after the
Mhm.
holidays, and supply chains will have a little bit of a glut because now there's going to probably be overinvestment in them. So I do think things will normalize. But yeah, there's definitely a lot of pressures right now for that.
Yeah, especially when everyone's talking about how America's the economic machine that will last for centuries, and then uh, you have inflation rates this high and a supply chain, you know, that's not as functional as it should be. It puts a lot of pressure and a lot of stress and hyperinflation being thrown around. So that
Especially by
little
CEO of a tech company on Twitter. I'm assuming, is that what you're referring to? Is Jack Dorsey tweeting about it?
yeah, that, and I don't whatever Motley Fool's articles are popping up in my recommended about
They're
hyper.
writing.
I
No.
I saw like one or two. I don't know how to
Yeah.
mute them, but yeah. So yeah, that was a really good way to paraphrase all that, and you
Yeah.
know
It's confusing and it's kind of scary because you're like, the food has definitely gone up in price. Like,
mhm.
there's a lot of like the planes being canceled. Like, there's just a lot of cracks beginning to show. But I think things will normalize. Yeah, hopefully.
Yeah, definitely. I mean, like you said, everything's connected. If I go out for lunch someday and stuff is a bit more expensive, I'm gonna wonder why. So yeah, definitely.
Yeah. There's a really good paper by, I'm going to forget his last name, but his first name's Jeremy. And he talks about inflation expectations and like how the Fed, it's always been this like, we need to hit inflation of about 2%. And now it's average inflation targeting. So 2% over the long run of this like average increase in prices over
Mhm.
time. And he's like, we have to really make sure that inflation doesn't get into the narrative of the everyday person. And they're not like all the time talking about inflation because that's a self-enforcing feedback loop, right? Like if
Yeah.
you and I talking about inflation and then going out and seeing like maybe prices are higher by like 1 or 2%, like, very, very minimal amounts, like
Mhm.
relatively. But the more people that talk about it, the more people that are going to talk about it because they hear them talking about it. And then you get even more pressure just because people are talking about it.
Yeah. Positive feedback loop, but not really. So
Yeah.
yeah, that makes a lot of sense. That's a good way to think about it. Yeah. Do you feel like a lot of this inflation is like primarily powering all these like huge market prices right now, or do you think stuff is gonna like taper back, or like a big correction is going to happen or everything? I'm not asking to predict the market because none of us can, but
Yeah.
I don't know.
Yeah, I mean, I don't know. Like, I think about this a lot. And I think that we are sort of trying to figure out what's going on. And with Facebook going metaverse, right?
Hmm.
You're going to see a lot more companies like going into the metaverse, like trying to do that, sort of getting away from investment in physical. So I think that could be interesting. It's just like this continued delineation between, our digital and physical reality. So that's something I'm a little bit worried about. I think it's good the Fed is beginning to taper. So beginning to be like, whoa, things are a little bit too easy right now. Everybody's a little bit too spending too much money. We're going to make things a little bit harder for them to do that. But they are also like, it's unprecedented circumstances. We don't really know what's going to happen. And so I think that there's just going to be a lot of trial and error with regards to policy and a lot of questions about like, is this even the best policy to have?
Yeah, that makes sense. On the terms of like the metaverse and stuff, I also watched one of your videos where you were talking about what the metaverse was, and uh, I remember a comment under it was like, it sounds really cool, but I'm gonna miss the physical world, and I don't want a tablet glued to my face. So, what's your like general consensus on this new like environment that like it's called the metaverse, or whatever it's going to be called in the future?
Yeah. Yeah. I think we're going to have to change the name because Facebook co-opted it.
Yeah.
Um, um, Yeah, I mean, I'm excited. I think there's going to be a lot of cool applications for learning. So like, I don't know about you, but when I was in school, like it just wasn't the best way for me to learn anything, like just kind of sitting there memorizing stuff. So I think the metaverse and kind of like having kids in a more immersive environment is going to be really neat for them. And they can kind of learn how they need to at that point. I think for social interactions, and so for context on like what the metaverse is, just quickly, it's kind of like this digital physical reality. So you would wear VR goggles, you would get immersed into like this almost like I want to say like Fortnite, like a video game style world where you have an avatar and you can interact with different people. It's a persistent environment. And like the main thing with the metaverse is you have to have like another person that you're talking to. So like Neopets or I guess, yeah, Neopets wouldn't be the metaverse because you're not like actually interacting with another person. And so like that's the main thing with the metaverse. And I think that there's like a lot of cool applications, but I do think that it's really important. This is what I have hit on in a couple of my pieces recently is like the world is still burning outside. Like climate change is definitely something that is not solved. And I think that if we just kind of like run away into the metaverse, that's a really big issue. And we can't forget about where our feet are, even if we're like plugged into these goggles, or else we will have like a Wall-E. I don't know if you've seen that movie, Wall-E, but like that kind of world. Yeah.
Yeah, I mean, I mean, I see the part that like has major implications to make, you know, like everything we just do is to make stuff more efficient, and the metaverse is kind of that next step. But another part of it is just companies just becoming bigger and bigger, you know, and just all this usage. How much data does Facebook have? We don't know. But when these goggles are literally tracking your emotions and storing that data, you know, um, it doesn't become a, you know, a concept of, you know, increasing our revenue figures. It just becomes a concept of how big can we get. Well,
Yeah.
yeah.
No, I think that's really fair. And like if I don't know if anybody who is listening has read Ben Thompson's piece about like why Zuckerberg is doing what he's doing, but it's really interesting. Because like if you think about like kind of like the entity of Mark Zuckerberg building the metaverse, like however you feel about him, um, Facebook itself was pretty detrimental net to society. And it's like, could we see that same sort of impact in the metaverse if we have sort of the same founder building it? And then I think also like if brands take over the metaverse, will it just be another advertising vector for them? And is that really like a world that we want to live in?
Yeah, I like that piece of how, you know, if we put Zuckerberg in charge of it, it's not to hate on Zuckerberg, or maybe
No.
on Zuckerberg, but if we put him in charge of it, it kind of deviates it from what it's supposed to be. Like, I don't know, 20 years ago, it would be so strange to like take out your phone and, you know, show someone that, hey, this is a picture of me at the beach or something. It would be so strange, but now it's the norm. And, you know, the norm in 20 years is going to be putting on my goggles and going to school or something.
Mhm.
So, and who knows how that's going to deviate from what its original goal was or whatever.
Yeah. No, and I do think we'll have a world where it is more normalized to like just go pop in your VR goggles and
Mhm.
go. And I think that there's resistance because it's new technology and there's always resistance to new technology. But I do think it'll be different than how we see it now.
Got it. Yeah. This one is from our community as well. Describe your investing style. So, yeah, you mentioned you did options trading in high school, but go ahead. Yeah.
Yeah, so my investing style is much simpler than it used to be. So when I joined Cap Group, I wasn't able to invest at all unless it was in my 401k with the Cap Group's fund. And so 2 years I was off the market, which kind of sucked. And then when I came back, I was, options trading did take up a little bit of time, and I now just have more of a buy and hold strategy. So I really love tech companies, really love like anything video game related. So Roblox, I think they're a great company. I really like Snapchat. So just like these different companies that I think are going to last for like 10 years and sort of are on the forefront of innovation. And then on like the other side of my portfolio, I have like recession proof companies. So I love waste management companies, like trash companies, like different companies that I think are just going to play an increasingly important role and are just very sticky and we just can't get rid of them. They're
Mm.
very boring, but they're going to be around for a long time. So that's kind of how I think about like my equity allocation. And then with crypto, I do own crypto. I own mostly Ethereum, and I own a couple of altcoins. So I own Solana, and then I own a couple other stuff, just like small allocations to like my play fund. And then, but I do that because I do see like just upside in those. I don't think it's most an investment strategy as much as like a speculation strategy with
Yeah.
some of the cryptos. And then I own some tokens because I belong to some DAOs. So that's kind of how my portfolio is structured right now.
Hmm. That's good that you structure it around innovation and founding and stuff, because those are what was I about to say? I blanked out. But a
Yeah.
lot of those companies are like, oh, sorry, yeah, like with Ethereum mostly, or Snapchat or Roblox, it's mostly around people building around it and use cases and stuff, and growing like that. The potential for ad tech right now, I feel like, is uncapped, because you know influencers are making this much money per viewer. Who's saying the viewers are going to cap down a bit, or who's saying the money they make per viewer is not going to go down? you know and who's saying that Ethereum smart contracts are just going to leave, or people are going to stop building with those the apps. So building around innovation is a good strategy, and having those sticky proof companies just in case innovation doesn't turn out, it's also nice as well. So yeah.
Yeah. Yeah. I like to think of it as netting itself out over time.
Mhm.
So like obviously Snapchat got destroyed
Yeah,
recently. And so like, but like my trash companies were good. So
yeah,
yeah.
exactly.
Yeah.
Trash companies go up, the companies we think are trash are,
Oh, I know the irony of it. Yeah. Yeah.
anyways, that's about all the questions we have. Is there anything else you'd want to talk about or mention?
Yeah, I mean, I think the biggest thing is just like start playing the game. So it can be really intimidating and like you feel like, oh, it's too much to know, but just download an app that you feel comfortable with and put in even just $50, $25 and just like start seeing what it's like. I think paper trading is pretty good. So when I first started, I was pretty risk averse and I was like, I don't have any money, so I
Yeah,
don't want to like lose any money. And so that really enabled me just to like play the game, pay a little bit more of attention. And then also like you don't have to be super, super in it. Like you don't have to be like me and making YouTube videos about it, but you can be as in it as you want to be, right? And I just think it's
yeah,
a really great way, and especially if you're younger, older, it's a great way to just sort of pay attention to the world around you.
yeah, definitely. That level of risk you were talking about, you don't have to
Yeah.
be a complete finance guru, but you also don't have to be a complete couch investor. So yeah,
Mhm.
definitely. But thanks so much for coming on, Kyla. It means a
Of course.
lot. Yeah, check out her YouTube, Twitter, and newsletter. Great content there. Love it. And yeah, take care.
All right. Bye. Thank you.
Bye.